Here we are at our very last panel. This one is entitled Research Applications, Putting Knowledge to Work. And we're very happy that Michael Joyce joined us to moderate this panel. He works as an advisor to the government of Indonesia, providing advice on digital financial services to various government programs there, and has worked in mobile money since 2008 in Cambodia, Bangladesh, and Indonesia. I've asked Michael just to say a few words about what he does and the scope of his work before he introduces the panelists and we get on with the show. So I'll turn it over to Michael.
Basically, I'm very happy to be here looking at all this different research, because my role in Indonesia, I work in a body called TNP 2K, which is a mouthful, but it's effectively a poverty advice think tank and economic advice and research body. It's part of the Indonesian government, so it's actually got authority underneath the vice president, but it's funded by external donors like Australian aid and some US aid funding, as well as Indonesian government funding. And financial inclusion is one of our relatively new areas that we work on, providing advice to regulators on mobile money, branchless banking, working with some G2P programs. It's been great to hear already today, and we'll hear more in this session, about the government-to-person payments. In Indonesia, just in the last 2 months, we've started switching one of our cash transfer programs over to using e-money, and they've actually launched 1 million e-money accounts just in the space of a month, using a bank and telcos and the post office all cooperating together. But I think I've already learned a lot today about why it's not enough to just give the accounts to people. You need to actually encourage them to use it and try to encourage that actual next generation of activity. And that's why I'm really looking forward to this session as well. Because we've got different speakers from 3 different countries, and it's a combination of looking at some of that G2P activity where the government is pushing a service to people, and then we're looking at how they use that, how they respond to it, how we can make that more effective. But then also in Kenya, you know, the land of so much innovation in this area. One of the best innovations I've read about recently is M-Shwari. You'll hear more about it as digital financial services too. You know, it's got interest-based saving, it's got credit, it's got much more advanced credit models than we're used to dealing with in microfinance. And I really want to know more about the demand and how people choose to use these services, as well as how services get pushed to them. So I think it should be a very interesting panel to compare those two ways of using finance. And with that in mind, I'll call upon our first speaker, Julius, who's going to tell us about the G2P program in a very specific localized area in Uganda. So thank you.
Yeah, my name is Julius Okello. I am here with Dorothy. We are all from Uganda. But before we proceed with our presentation, on behalf of my research team in Uganda, and on behalf of African Institute for Strategic Research, Governance and Development, we would really want to give thanks to Professor Bill Muller, over behind there. We want to thank you so much for guiding us right from the beginning, accepting, reviewing our tools that we used to collect our data. And then we would also want to thank Jenny. For us in Uganda, we consider a person who's very consistent in communication as our mother. So Jenny, allow me to call you, you are our mother. You've been you've been so much effective in terms of communicating and in giving us encouragement, especially when we are trying to apply for the visa. It was a little bit difficult for us to get a visa back home. And of course, the team that works with you all, and my moderator, Joyce, Michael, whom I had a chat with on Skype, pretty asking us about our project and how far we have gone. I would really want to thank you so much for giving us encouragement and for motivating us to come strong. Actually, we arrived a little bit late, but we are strong. Our topic is effectiveness and challenges of using mobile money services in the implementation of the social assistance grants for empowering program in Uganda. And we only take one district as a case study of Kiboga. That's the organization I'm working for. And my name is just over there, Julius Okello. We have Mayanja Dina. Then I have Dorothy, who managed to come with me. And then we have Professor Samson Opolot, who is our technical person and giving us guidance. SAGE, as it is known, it was launched in Uganda by that gentleman putting on a cape, and he is called Yoweri Kaguta Museveni, the President of the Republic of Uganda. He launched that program after having a wider consultation with the development partners. And this came as a result of the demand and supply side on looking at how do we address the households who are vulnerable to poverty. So we had the FID, we have the Irish, and UNICEF, who made a commitment of 41 billion pounds. And of course, the government of Uganda is also contributing to the tune of 50,000 US dollars. And of course, there are other in-kind contributions, but this one comes from different government ministries within the government of Uganda. We have different definitions of that component of social protection in Uganda, but for this, we will focus on the SAGE program, which is a 5-year program targeting about 11 districts out of 112 districts in Uganda. Our outline of the presentation is, would like to share with you the map of Uganda, the map of Kiboga District. Would like also to give you overview of Uganda and social assistance grant for empowerment. And then the distribution of SAGE beneficiaries per district. Would also like to give you the background of our project, then why we wrote a proposal and it was accepted, the need for the study, and then of course we shall discuss with you also our methodology, then a brief summary on the telecommunication who are providing SAGE, helping the government, and then our preliminary findings and challenges that are faced by those given the contract and the receivers, those are the beneficiaries. And then some benefits, dangers, conclusions, and recommendations. So, as my earlier colleague from Uganda presented, Tugume, this is our map of Uganda. Uganda is bordered in the north with the South Sudan. In the east, we have Kenya. In the south, we have DRC, Congo, Rwanda, and Burundi, and Tanzania. And then in the west, we have DRC, Congo. In Kiboga District, there are 8 sub-counties. We forgot to put 1 town council. Here we have the distribution of the SAGE beneficiaries, those who are benefiting from the social protection program. The areas covered with green, it's area where the SAGE, where our social protection program is being implemented. And just below here are the numbers of districts where the donors accepted to fund. We'll briefly give you the background why those districts were selected out of 112 districts that the country has. We'll give you the justification as we proceed. Of course, our area, country, is about 241 square kilometers. We have just conducted our national census population. The preliminary results show us totaling of 39 million people. The number could go higher because they are still generating the statistics, but this is what we managed to obtain as we are coming here. In the Kiboga District, we also given the figure of 148,000 people in the Kiboga District. In Kiboga District, we decided to disaggregate this 148 in form of female and male, where in Kiboga we have 75,339 male, and then 73,267 females. The sex ratio in Kiboga is that, in terms of percentages of those who are elderly persons who are benefiting from the SAGE program, we have 53% are female benefiting from SAGE, and then we have 47% males who are benefiting from SAGE program. The national population of entire country, here where the green is, of those who are benefiting from the SAGE program, is 74,500 beneficiaries, and this includes male and female. In the Kiboga District alone, we have 4,808 beneficiaries, both female and male. So, as earlier on said, we have 14 districts benefiting. And Kiboga District is here. We decided to break down of the SAGE beneficiaries per sub-county. As we said earlier on, these are the numbers of sub-counties in the Kiboga District. And these are the numbers of beneficiaries who are benefiting from the SAGE program. And this gives us the total. So in this number, we have both the male and female. But it's not meant for all the category of people. It's only targeting what for us we refer them as the senior citizens. These are the elders. A person who is above 65 years and above. But for some vulnerable communities, like here, that's in Karamoja, the government and development partners decided to lower down the number of age for those who can benefit. Why? Because of their poverty level, because of their culture, which is still rigid. And we are saying that I think in East Africa, some cultures that are still intact in East Africa, also in Kenya, That is the Turkana and Maasai in Tanzania. Then for us, we have the Karamoja and the Topotha in southern Sudan. Their culture is still very intact. Sometimes even their leaders themselves, they are summoned and they are caned in front of in case one has misbehaved. SAGE was launched, as I showed you earlier on, the head of the state, the president, launching it, of course with the support and funding from the development partners. It is an arm of expanding social protection under the Ministry of Gender, Labor and Social Development, and within the ministry, we shall also show you the structure. It's a 5-year program covering all those districts that we have already outlined. Why did we write this proposal and it was accepted? We looked at the MTN services as our focus against other telecom services. We also asked ourselves, why did the government decide to pick only MTN out of so many telecommunication companies in Uganda? So, since it was launched in 2009, the company that's MTN registered about this figure of mobile users in Uganda, and this translates to the rate of 64,740 persons registered in a month. On average, the relative market share of MTN mobile money, the ZAP, the M Center between March 2009 and February in 2010 was 89.6%, 9.1%, and 1.3% respectively. Meaning that the MTN had the highest of 89.6%, followed by ZAP, that's the Airtel, of 9.1%, and then M Center, which is a UTL of 1.3. Given the history and coverage, the government opted to have MTN to help in the cash transfer for such beneficiaries. Okay. The use of mobile money in Uganda is still a new achievement, especially in areas of communication. And then, yes, it's still a new approach. But here we have our study approach. We decided to go for mixed method, having both quantitative and qualitative. In quantitative, we had our sample of 300 within Kiboga District. We tend to do some regression analysis, and of course coming out with the figures, tables, and graphs. And then qualitative, we want to come without detailed information on the impact of such program to the beneficiaries, and of course telling us the actual benefit of such. This is this is the types of telecommunications in Uganda. We have MTN, we have Airtel, M Center, and then the recent one, which is NZ Money. What's the SAGE structure? The SAGE structure in Uganda, right at the corner, this one, we have Bank of Uganda, which is known as Central Bank. Then we have the Ministry of Gender, Labor and Social Development, where Department of Social Protection falls. And then at the extreme side, we have the Uganda Communication Commission, who play a role of regulating both communication and the mobile money transactions in Uganda, not only for MTN. Then we have the development partners, the other side, making the interactions with the government. They just interact direct. And then, of course, they have a linkage with the ministry and the Department of Social Protection in terms of accountability. Because Uganda is ranked as the worst country in terms of corruption. So the donors get the list and the names of those who are benefiting direct from these people. And then they also do verification on the ground, on the spot, when the cash has been transferred from the MTN source. And then, of course, we have MTN agents spread all over the districts of Uganda, including the coverage where social protection is implemented. Then we have the coordinators of expanding social protection who link up with the MTN and their agents, and of course, they also have interaction with the Department of Ministry of Gender, Labor, and Social Development, and of course, social protection. And then here below, we have the SWAGE beneficiaries. On this side, we have the unknown, those ones who have been locked out, like Airtel, UTL, Zen, Orange, all are not being given a chance to participate in the implementation of social protection program. We'll give you some of the reasons why the government opted to use MTN. So how do the cash transfer on such program work in Uganda? So briefly, I'll just highlight this. We have a key partner here, that's the Parliament of Uganda, who normally demands for accountability from the Minister of Gender, and that accountability is being shared on broadly with the development partners to see whether this money has really reached to the real beneficiaries. And this money is released from Bank of Uganda, which is the central bank, who releases these funds to the MTN. And MTN sends this money to its agents. And from the agents, they send this money to the beneficiaries. So these are some of the cash transfers activities. Here is the head of state who launched the SWAGE program in a district that we're investigating. What you see here, this lady didn't have a mobile phone, but MTN had to create an innovation of introducing a box where a person, an older person who doesn't know how to use the phone, you simply go and insert the card and you draw the cash from there, but it still records the transactions has taken place at a given point. And MTN is able to give the feedback to its different partners. Here, this old woman was receiving cash, and then here, this lady also received the cash for the husband who passed away. Because he was nominated, as the husband was nominated, passed away, but she was allowed to receive the money. And this is ATM machine. This is the registration process for, these are the children of the elders who passed on. M10, we have some our tentative findings. M10 still lacks a robust mobile agent presence in Kiboga District. Given the limited network coverage in the SWAGE target areas, agents travel for long distances. We shall discuss that at later level. We have still tentative findings continued. As per the release of the SWAGE grants, so far this what has been spent, 11.7 trillion Uganda shillings for the period of 2012. We have some vulnerability of cash. We shall also show you the examples of vulnerability of cash where the money is sent from this source, but it doesn't reach to the real beneficiary. It's diverted somewhere in the names, in the quotes, corruption. And then unlawful withdrawals, especially by the agents themselves. These elders, after walking all that distance, they are told the network's broken down. Yet this agent has drawn the money, used it and gained some profits or some percentages, then he puts it back. When the person comes, he releases the money, and yet he has made some profit out of it. This is one of the voice of the person we interviewed. She was so frustrated and disappointed. The targeting is still a problem in terms of implementing this SAGE program or implementing the cash transfers in Uganda. We have this whereby if you are known, for example, Michael doesn't know me and I'm old, he will definitely leave me out, however much my status is. But if I'm so close to Michael, he will definitely pick me and I'll be included in the SAGE program. So we still have a problem in terms of targeting. We have poor attitude, of course, by the beneficiaries. We shall show the examples, like they accuse them for cheating. They are very difficult people to work with. And then the charges of costs. Because of time, let me just, what could be the potential of this? How can we transform these people if they use that money? Here we are just highlighting some of the innovations of these elderly persons in areas we visited. And these are some of the success stories. I will just highlight one, with your permission. There's one elder, out of the savings, they had a group, they formed a group, and they combined their money, and then the children who live in the city contributed. So they decided to have consolidated fund, and this is what they decided to participate in. They decided to go into sunflower. So we did a calculation and said, if 1 acre produces 2,500 kilograms, and 1 kilogram of simsim is sold at 350 shillings. In one season, this elder person earns about 875,000 shillings, Uganda shillings. In 2 seasons, the person will be able to earn about 1,750,000. In a year, this would be his total earnings. This old woman, the same story. Yes, what are the dangers? The dangers so far we have got from our field, these elders are being trapped, especially when they are being paid like today. The youth who are unemployed, who take drugs and so forth, because when their payment is going to be done, the donors told the government, you must make people know public, because we want transparency. So this other young category of people decide to converge, organize also themselves, and arrange some gaps, in case this person is paid, they just go and beat him up and withdraw the money, and the money is taken away. So these are some of the culprits. You can see here, the police arrested some. And then we have difficulties in the PIN number. They tend to forget, the distance covered. Then mobile money agents, making lives of these people are very difficult. Then the network coverage. Here I'll just show some of the people who travel long distances. And of course, this is our roadmap. Our first financial and project narrative report will be able to submit by end of January. Then data analysis in Feb. And then, of course, submit draft policy brief paper and blog to IMF for review and acceptance in March. Then we will also want, if it's been accepted, we take it back for external review by April. And then, of course, we submit our final study by end of June. So I just want to say thank you. Normally, when these people are paid their money, I'll end with this. When they are paid their money, elders, there's what we call the culture. The elders slaughter an animal to celebrate the money they have received, such that they have good understanding, and they are not attacked at night by these hungry youth who need the money. Thank you very much for listening.
Okay, well, thank you, Julius, for that, and also Dorothy for the work you've done in preparing that. I'm sure there'll be many questions afterwards. I think it's very good to hear the stories of how hard these programs are to get running. You know, we often hear of success stories and new innovations, but there's huge amounts of effort that needs to do on the ground, and it's great to hear you investigating that effort and reporting about it. For the next speaker, I'd like to invite Enrique up to the stage to talk about another G2P program working in Mexico. Thank you.
Hi, I'm Enrique Seira from Mexico. This is joint work with a bunch of co-authors. And I'm going to talk about paying oportunidades, which Carlos and Silvia talked about the program a while ago. Paying oportunidades in a debit bank account. So I'm going to talk about a program, a conditional cash transfer program, that started paying instead of cash, paying in a bank account. And then they started adding services to that bank account. I'm going to look at one in particular, which is an ATM card. So I'm going to mention 4 things in the presentation. It's going to be a brief presentation. First, I'm going to have one slide that describes how people save in Mexico using a representative survey of the country. And then I'm going to zoom in into what Oportunidades is doing, paying in bank accounts, number 2, which is basically the bulk of the presentation. And then I'm going to have some graphs showing that savings vary a lot across consumers and across time. And finally, I'll mention some further areas of development for the project. Okay, so first question is, who has formal savings accounts in Mexico? Just gonna have one slide on this, and we did 2 things. We did the first 2 columns. Just took a survey in Mexico, with national representation, and we particularly interested in who has a debit card and who doesn't have a debit card, and just looking at their differences. And some obvious patterns come out, expected patterns. So, debit card owners have 3 times more tertiary education than non-owners, 3 times more savings, and are also more trusting. There's a question asking them, for example, if you lose your wallet in the street, how likely is it that you think you're gonna get it back? And there's a lot of variation in the response. People that have debit cards more often say that people would return their wallets. So they're more trusting. This is the nation, this is the country. Then we look at, as you can see, there's a lot of differences in people with and without debit cards. Now, when we go to Oportunidades, we expect 2 things. First, because these are poor people, the sample is going to be more homogeneous than the country as a whole, and they're going to be poorer, is what we find. And people with and without debit cards are very similar in terms of education, in terms of age. They're not similar in terms of savings. So what we're going to do, I just wanted to show 2 things. First, that people in Oportunidades are more homogeneous and are poorer, but that there's not a lot of difference between people with cards and without cards. Part of the reason that this is the case is that they don't decide to get a card. The government gives the card to them. So there's no selection, self-selection in that sense. Okay. So this is the main part of the presentation. So I'm going to talk about the effect of ATM cards in the savings in the account. Okay. So there are like 6 million, around 6 million Oportunidades beneficiaries, and the government started giving them bank accounts. So about more than a million of them had a bank account in 2009. But the problem with this bank account is that it didn't have an ATM card. Basically, you had a bank account. It existed electronically in the bank, but and you could go to the branch and withdraw money and deposit, but you had to go all the way to the bank branch to get cash. You couldn't pay you couldn't pay in a store with an ATM card, and you couldn't withdraw in the ATM. So it was kind of not very useful, this account. And of course, they realized this, and they started awarding debit cards. Okay. So what we're gonna do here is look at the phasing of this program awarding debit cards. And we're gonna do this. I think this is something that has. This is one of the contributions to the conference. I think, from our side, is that we're not looking at survey data. We're looking at administrative bank data, which is kind of rare. So we have 300,000 bank accounts in this data that belong to 300 branches that serve 400 municipalities. So it's a big sample in all the country. And we observe what people do with the bank account, the savings, for 17 bimesters. Okay? And it turns out that from this sample, 70% of people got an ATM card during this sample time. Okay? So we have people that got it before the end of 2009, after the end of 2009, and people that haven't got it yet in this sample time. Okay? Okay, so how does this look geographically? The green ones are the early adopters, and the blue ones are the late adopters, and the gray ones are the ones that have not adopted in the sample time. So you can see that this is a problem that covers a big part of the country in different places. And also, this is how municipalities that implemented first compared to ones that implemented later. And the purpose of the graph is to show that there's not a lot of differences across municipalities according to the timing of adoption. These are similar municipalities. The main difference is that they implemented first. Why? Because of some administrative reason, they wanted to implement first, no? But they're the same size population, the same education, the percentage indigenous, percentage dirt floor are similar. So what we're gonna do here, after this, we're gonna compare the blue regions with the green regions. We're gonna compare people that already got the card, with people that still haven't gotten the card, but are gonna get it in the future. Okay? So you have like an experiment here: people with card and people without card, and we're gonna see what are the difference, how they behave. Now you may wonder, okay, why such a fuss for a debit card? Why should we expect debit card have any effect on savings, which is what I'm going to look at. And there are several reasons why this could have an effect. One, so I'm an economist. I cannot hide it from here on. So there's several reasons why this could have an effect. One is if it's cheaper to withdraw money before you have to go to the branch. Now it's cheaper. What you can do now is withdraw less money, but go more times because it's much cheaper to go. Okay, that means that on average you're gonna have higher savings just because you are not withdrawing large amounts; you're withdrawing smaller amounts. Okay, so there's a model in economics that gives you that prediction. The second one is that it's a better savings technology. And savings are less, more secure in service. Having savings is less costly now because now it's easy to access them. Third, and this is all hypotheses, right? These are just presumptions why this could have an effect. Third is if you carry less cash, it may be that you spend less. No, less than you have less money on your wallet, and you can spend less. Of course, you can have the other effect, as Jonathan Murdoch was telling us yesterday, that paying with plastic could induce more consumption. No? That's the opposite. 4 is the opposite of 3. So these are hypotheses, and we want to know first if having a credit card, a debit card, has an effect on account savings. I can provide details if you want in the question session, but just to summarize this, we compared this methodology. What it does is compare people with and without the card. Okay, and what we're seeing is that the card actually is increasing savings by about a third. Okay, people were saving about 600 pesos, which is about $50. And then it increases from 600 to 800, just more or less. No? And that's a robust result across specifications. No? And if you see it here, you can see that the difference between people that got the card and don't have the card is 0 before getting the card. They seem comparable before having the card. But after having the card, the savings start increasing only for the people who got the card, relative to those that haven't got it. So one puzzle here, kind of a puzzle, is that it takes about 6 months for people to respond with increased savings. Now, there's maybe several reasons for this. We will see that it can be due to implementation problems. It could be that people don't trust the account, so they want to put more money there fast. So the results so far are that people do save more, 30% more in the account, but it takes time to take off. This is so up till now we were using only account data. Now we took advantage that there's a survey on some of these people, and we asked them if we wanted to explain why it takes so long. We wanted to see how the program was implemented. This touches what Michael is saying, that it's kind of hard to implement these programs. There were 2 surveys. One survey was done to the implementers, to the people that explained to the beneficiaries how to use the account, and there's another survey done to the beneficiaries. Now, what we could see here, we could see many things. One is that when beneficiaries got asked, did you receive a good ATM, how to use the ATM, good training? 60% said yes, 40% said no. No? Did you receive a financial education talk? Only 21% said yes. Do you actually get help today to use the ATM card? 51% said yes. I still need help to use the ATM card. We also, the survey also asked about knowledge. Do you know your fees, how much you get charged by using the ATM card? There's very low knowledge of fees and the rules that apply to the debit card. That's one thing. So that says it's kind of hard to implement. These people are not understanding completely what they're doing or how to use the card. And it also was the case that early implementation had more problems than after the program had some months. So there was early implementation problems here. Okay, so I showed you that people do save more. I showed you that they save more even though they don't understand completely the product. They have many questions. And what else am I going to show you? I'm going to show you two more things. These are the savings in the account, and this is a histogram, this is a distribution. It tells you that there's a lot of variation in how people save. Some people save close to 0, most people save close to 0, and a few people save a lot. There's a lot of variation. All of these are opportunity beneficiaries, so they're kind of poor, all of them, but still you see a lot of variation in savings. Why? One important question is why? Why do some people use the account a lot and some other people don't use the account at all? No? Second, that's also interesting is comparing, this is days after the account opening. So this is about a year or 2 years after account opening, and you could see that the more experience you have with the account, the more you save. So people are saving more with experience, and this can be a trust issue, a learning issue, or it can be just forget about learning and trust. It could be just that it takes time to reach a target level of savings. So, but it does sound that we need to explain this, why some people save more and some people don't save, why some people use the account and others don't. These are all poor people, and this profile of increasing use with experience. Finally, these are survey questions about what do you think the advantages are of having the account. Number of times you check the balance, because anecdotally, apparently, some of the beneficiaries check the balance many times a day. This is anecdotal evidence, because they were afraid, again, that the government could steal the money or the money was going to disappear somehow from the account. So they check the balances many times. What you can see here is that with the more time the time passes, the less they check the balances. And the more they use the ATM card to purchase. And the more that they recognize that this account is good for managing the household expenditures. So there's some evidence of learning here. So that's all I'm gonna say. Basically, just to summarize, the ATM card makes the account more convenient, that causes more savings, and that it takes time for people to trust and learn about the account. Now, what do we need to do still? One is we haven't been able to link the usage of the account with demographics. So we cannot answer the question who saves more, who uses the account more. We cannot answer that question. We need to get data on that. And we would like to, in the future, do a survey to measure trust, why it evolves, and to measure the demand for money and the demand for paying with cards. No? How much cash do people hold? What determines this? And to what extent people use POS devices and ATMs. So thank you. Thanks.
Thank you very much, Enrique. I'm sure we'll have a lot of questions about that. I think it's fantastic to be able to use big data sets like that, and especially data over time, to really get that analysis. But then also, you've shown how it often highlights, the further details that we need and we can't get from just looking at the numbers, and need to actually talk to the people involved. So a great sort of hybrid there. And also, thank you for, I think you're probably the first person to put so many equations in those slides, but you explained them very well, and the results, and I find it quite amazing. We've gone so far in an academic-focused conference before, before the numbers and equations started to show up on the screen. So well done on that. And to take us home with our last presentation, I'd like to invite Jane from Kenyatta University and Ndunge from Houghton College in New York, who are going to be talking about a very innovative financial service coming out of Kenya called M-Shwari, and some of the lessons learned from that. Thank you.
Okay, good afternoon. Our project is on the use and impact of M-Shwari as a financial inclusion banking product in urban and rural areas of Kenya. This research was done by three people. That is Ndunge Kiiti, has already been introduced. And then Professor Zioka from the University of Nairobi. He wasn't able to join us, and at least he's with us in spirit, and myself, Jen Mutinda. Then even before we started the project, we had a consultant, that is Dr. Monique Henrik from Emory University, who carried out the trainings for the researchers because we wanted to put them at the same level. So because we use university students and people who are not really trained from the same universities, we got her to come and do the training and really teach them how to transcribe, how to carry out the research. The research, the researchers, as introduced, at least are still doing the work. We are still analyzing the data. But even before we do the brief presentation, we want to see a video, because when we went to the field, we used Steve. I don't know whether he's around. Yeah, Steve, we went around with him in all the research areas, and he did the video for us. And the reason why we use the video is because video is one of the approaches that is very good in research dissemination. So we'll see that brief video, after which we are just going to highlight some of the key features that will not have been covered in the video. Thank you.
I'm sure it is designed for the people on the move.
Mobile technology has made our work to be more easy than it used to be.
In fact, the mobile money has transformed the way we work.
The purpose of this research is really to understand the use and the impact of M-Shwari amongst the Jua Kali sector in both rural and urban Kenya.
The word Jua means sun, and Kali, the hotness of that sun.
It signifies the informal sector in Kenya.
Jua Kali is 90% service industry. We're talking of masons, we're talking of plumbers, we're talking of all the artisans.
The Jua Kali sector is very critical to Kenya.
It is the one that employs so many people every year.
About 19 million people are self-employed in the so-called informal sector.
The only way we can provide solutions to unemployment in this country, which is a serious national problem, is by expanding the Jua Kali sector.
Before the mobile telephone came along, the bankable populace was very, very little.
For a long time, the traditional system has been walking into banks physically.
Some of us who had accounts would walk maybe from Kaloleni to Mombasa, 44 kilometers, just maybe to make one transaction.
This in itself cuts out quite a segment of the population out of the banking services.
There were many difficulties for artisans. Opening an account with maybe Standard Chartered or Barclays, it was very difficult.
M-Shwari, I can just say, is an idea that came at the right time.
It's a product that has been developed by Safaricom,
which allows people to bank electronically and to access credit electronically.
It's really to help provide access to resources, small loans, and also access to savings for many small and medium-sized businesses.
Like us here in Jua Kali, There are things which we shop in small quantities and within a very short duration. And you know, in that short duration, you can't go to your bank in 2 times in 1 hour. But with this M-Shwari of yours, it is very easy.
Instead of taking my 5,000 shillings to the bank to deposit in my account, the account is here. You don't have to move.
Nowadays, I've reduced in saving at the Equity Bank because of time. After working here, I get money, I just deposit in the evening at the M-Shwari.
You can borrow money from M-Shwari in cases where you need money to improve your business.
You'll just go borrow some money from the M-Shwari. You give an amount to pay with a very, very low interest anytime that you're short of money.
There are a lot of people who would like to use M-Shwari, but sometimes the basic understanding of the product is not there.
It's a very good service, but I don't know how to use it.
To myself, I do understand it's like an account, but I'm not all that sure.
Most of us don't understand exactly the transactions that goes on through M-Shwari.
That is what I want to know. What is M-Shwari? What is it for? What are the benefits of it?
The biggest challenge is that of loan.
The conditions, they're not very easier for small earners to borrow.
They don't tell us how much money you have to put in that account to qualify how much money to borrow.
Among some of these challenges is a lack of adequate awareness.
They don't know who is the owner of the M-Shwari, whether it is Safaricom or Commercial Bank of Africa, they don't know.
How is this link between this central bank and M-Shwari?
The product is good, but it needs follow-up.
Safaricom and that other bank, they have never taken that active role of promoting M-Shwari in the Juakali sector.
But if I'm explained more about it, I'll get more interested. It might be a benefit to me.
Most of the people here want to register in M-Shwari, but they don't know the process.
Many of the mobile money services are available in urban settings, and they're often more understood in urban settings. The people in the rural regions often don't have as much access to financial institutions and resources.
Most of the technology is in English, and most of these people do not understand that language.
What we hope that will come out of this research is that the findings will help encourage service providers and policymakers to ensure that the practices they have in place and the policies they have in place really engage the Juakali sector more in the Kenyan economy.
I wish M-Shwari would either be translated in a vernacular language or maybe in Swahili, where majority of this community understand it better.
Safaricom or its agents need to move to the grounds and explain to the people how to use this facility.
Nobody could think that you could do business through the phone. It has really transformed lives.
The saving with the M-Shwari gives you a solution to your financial needs.
M-Shwari with the other modifications and improvements can be taken higher than what it is doing right now.
I think you got a good overview of the process of M-Shwari in brief, synthesized. Now I'm going to talk a little bit about the why and the how. And I'll try to go quite quickly because I realize we have limited time. As we're quite aware, mobile money is quite common in Kenya. It's become what we breathe. And so one of the reasons why we figured this would probably be also be a good project was building on our other projects, mobile money technology. As you see there, that just briefly shows some of the uptake of M-Shwari and the use of M-Shwari. We're also seeing in Kenya an increased use of M-Pesa as a platform. And these are just a few of the selected Safaricom Bank partners. And obviously, we're focusing on the M-Shwari. There's M-Kesho, there's M-Banki. Those are with Equity Bank and KCB, Kenya Commercial Bank. But there are many others. I think now most banks are realizing mobile money is here to stay, and therefore we've got to jump in as well and join in. Some of the different factors that have encouraged us to look at M-Shwari specifically are some of the things you heard in the video, and I'll just highlight specifically the bottom ones. Just the fact that we have so many unbanked still in Kenya. As much as we have so much access to financial services, we still, according to the Central Bank of Kenya, have 300 billion or over 300 billion of money that sits outside of the banking systems, and then there's millions of Kenyans banked. This is just a good example here. I think the key number here is the 50% that have no bank account but have M-Pesa. If we're talking about partnerships with banks, we have to look at that factor. These are people who don't have access to the maximum services that can be there. This is just another way to describe the use of financial services and service providers in the region. You can see the use bank. The bank is, the blue, is fairly low, whereas the mobile phone financial services are quite high. Therefore, if we're gonna link the two, I think the banks would be at an advantage to continue looking at some of these programs. This is just a map of Kenya. In a sense, it highlights the point we were trying to make somewhat, the rural versus the urban. I mean, obviously Nairobi, our capital here, is up to 52%, and then around Nairobi area, central, tends to be higher in terms of bank usage in Kenya. So access to financial, and as we get further out in some of these regions, you'll see the numbers and percentages get lower. And so these were some of the ways we also determined what counties to go to. We wanted counties that were high in terms of financial service usage. We wanted counties that were moderate, and we wanted low. And so we actually consulted with Safaricom. We spent, preparing for this project, we actually sat with Safaricom, not that we wanted them to buy us our study, but we wanted to make sure the research was gonna be useful to them to change also practices and policies. So this was one of the maps we used to understand. I'm not going to go into detail on this. Obviously, savings was highlighted. That's one of the strengths of M-Shwari. It allows saving, and you can see the quote at the bottom there. Saving is no longer the privilege of the elite, and so now people can save. What the implications of that are yet to be seen once we do data analysis, whether the saving that's really making a difference for SMEs, small and medium-sized businesses, or the Juakali service. Why did we look at Juakali, the informal sector? I think one of the key points here is that it definitely contributes to our economy. We kept citing this number in all the counties we went to, and everybody from the Juakali kept saying, where did you get that number? They're wrong. The number you're reading is wrong. We're about 40 to 50%. In fact, I think in Mombasa they told us we're 60% of the economy. So Juakali really does see themselves increasingly as playing a key role in our economy. And as you can see here, in studies, SMEs have emphasized the lack of capital as a strong constraint to growth. So we have to continue looking at that issue as well. Lack of data. We found very limited data. We spent quite a bit of time with the head of the Juakali sector, not just in Kenya. He's actually the head of Juakali sector for East Africa. So he travels a lot to Tanzania and Juakali. So we spent a lot of days drinking Kenyan tea We didn't have a problem with that because he gave us a lot of good information. And one of the things he kept emphasizing was there's very little data that even they can use as the Juakali sector in order to access better services. And it's proven by this research, which was sponsored by the African Development Bank and done by these authors, which basically say Kenyan banks have actually cited that lack of information is one of the constraints and obstacles to lending to small and medium-sized businesses. Why? Another reason, potential obstacle, another reason, another barrier to this challenge is really we want to see, or another opportunity we see in this, is the potential economic poverty link. We recognize, if we're talking about the Juakali sector, we recognize that most Kenyans actually really engage a lot with the Juakali sector. Most people in the rural areas buy their goods and supplies, go for services in the Juakali sector. And therefore, we know they are able to show economic growth and help probably reduce poverty. We don't have any data that shows this link directly, but we're hoping that it's making a difference, and clearly we heard that as a theme as well. So just to highlight quickly the phases of our research. We mentioned the beginning part. We just showed you a little bit of the video. We've collected our data in the counties. We haven't done any analysis or interpretation, and we have every research study we do, we used to do a workshop of stakeholders. We found this was one of the best models of really influencing policymakers. So we're gonna have Safaricom, we're gonna have the Juakali sector. We've invited them as we went around to the counties. We actually told them about the workshop. And so they're all going to come, and we're gonna discuss some of our findings and see how we move forward in terms of practice and policies, and then others. So let me just quickly highlight some of the ways we went about this. Jane mentioned that we did a training. Dr. Hennick from Emory University came and helped us with the training there. That was the whole group. We had 15 graduate and professionals, graduate students and professionals from about 6 different universities around the country. We chose them based on cultural background. We wanted students who came from the counties we were going to do research, because we felt that was key, and especially with language representation, both vernacular and national. We actually tested them in their Swahili skills, because we wanted to make sure they could speak all the languages. We used mixed methods, and I'll mention a little bit about that. We also invited Mshwari representatives. You'll see here, these are 2 Mshwari representatives. We got to a point in the training, there were so many questions about Mshwaris. The students asked us, wait, we're gonna be doing questions in the communities about this. So we called Safaricom, and they sent us some representatives as part of our training. We spent a whole afternoon with them, and so that was interesting. Content accessibility, the students all had folders to refer to this information, and they felt it was practical in many ways. Some of the selected components of the training, and I won't go into details about this, these were just some of the topics we covered on the left-hand side there. And these were some of the ways we wanted them to be able to apply the knowledge, the skills building, whether it's in building rapport, listening, probing. We practice these a lot. We use role-playing within our training and piloted, and you'll see pictures of that. As I mentioned, language was important. Q&A with Mshwari representatives was key for us. This is our pilot. We tested at the Embakasi Craft Center. We spent a whole day there. And we basically, as you can see, the Juakali do not have a minute to waste. So we have to take advantage when you're doing research amongst them. Sometimes they're doing their work. So as you can see here, he's making jewelry. As you can see here in the focus group, he's painting some kisi stone. He's doing something else, and he's doing something else. That's why they agreed to participate in the research. And we found that was the way it was. You'll see most people in their offices, see somebody else here, the crafts working with their kisi stone. So you kind of have to just fit into their schedule if you're gonna do this research as well. when we got to the field work, just to highlight a few things in terms of the field work itself, we went to 8 counties, as it shows you there, and they're listed there, and I'm not gonna go through them in detail. We can give them detail, but basically we did Nairobi, Eastern, these were the broad regions, Western, and the coast. And then within that, we chose different counties based on rural and urban. We did 160 questionnaires. The first part, more survey-based questions, and we did 10 users and 10 non-users. We wanted to find out, those who are not using M-Shwari, what are your reasons for not doing it? That was very informative, and I'm really looking forward to working with our data, because I think that's gonna be very telling as well, why people have not started using it as well. And then in every county, we did focus groups as well. Our sample characteristics, we tended to do based on access, convenience, based on guidance from the Juakali sector, and we did it based on consent. We were asking a lot of financial questions, a lot to do with their money, their expenditures, how they use money, do they take loans, were they rejected by the banks, why? And so we had to get consent, and so we had to use that. There were people who said, no, I don't want to be interviewed for that. And so usage was also important, and then gender. In Juakali sector, one of the issues is, depending on which sector it is, women are limited, and so we tended to try to draw that out as we went to the different sectors. The sectors, based on the definition of the Juakali Association, is manufacturing, and then service, and then agro-based, and small traders. Those are basically the categories, and we gave examples. And so these are some of the students collecting data. This was in Bondo with a bicycle shop. This was in Kaloleni near the coast. This was in Mombasa, and this was in Machakos. So different areas. These are the themes we focused on in the research. The qualitative, we were trying to find out the exposure to mobile money, technology, effectiveness of M-Shwari for Juakali, whether it's knowledge-based and promotion, usage, strengths and challenges, and its impact. What did they feel? And we did it under the qualitative because we wanted to hear people's stories. What we found is many people have a lot of stories with these, with this tool, so we wanted to make sure we got that. And then the quantitative was more on demographics, the income, loans, and saving experience as well. These were just some of the selected sectors. These were from all over the country. As you can see here, mechanics trying to fix the matatu that was in an accident, metal, you can see here pans. I mean, it was just quite the experience traveling around the country to collect this data. Just a few more comments. I know Michael is going to show me the time in a minute, almost finished. In terms of some of the, I think I skipped a section. Oh, I didn't. In terms of some of the emerging themes, we definitely want to see if there's a linkage between the socioeconomic status and the usage and effectiveness of M-Shwari. We're quite, especially looking at factors like rural versus urban, and then the type of sector. We heard a lot about we heard little trends about, are they not giving us enough resource because we're in this sector? So we're interested to see what the data shows. There were sectors that complained a bit more than others that they didn't get the loans that they wanted or the amounts that they were wanted. And we're curious to see if there's a trend and why those are the fact. Financial education is probably one of the key ones. You heard that in the video. We had quite a number of stories to tell about that. We were interested in understanding the curriculum. Who, why, who's producing it, why, you know, what are the purposes of it, what is it, when, what are the language, you heard the emphasis on vernacular, how is it being measured, whether it's effective or not. These are some of the questions we're interested in financial education. And then the link or gap between marketing and promotion that we talked about yesterday and knowledge and application, because we found that a lot. We had people like Mombasa, we arrived in Mombasa, and they were so excited when they heard we're looking at M-Shwari. They're like, finally, somebody who can show us how to use this service. So all our researchers were like, we don't know how to use M-Shwari. So you go, we were following them as they were interviewing just to make sure the interviews were going okay. And you'll find a researcher with somebody, and they're trying to help them figure out how to get access to the M-Shwari. They signed up for it, had no idea how to use it, and now they finally heard somebody's there about M-Shwari. They thought we were from Safaricom, and so they wanted us to help them figure it out. Policy and practice is another key part. Obviously, we think the significance of these findings can really help in determining financial inclusion or the issues of exclusion in mobile banking in Kenya. So that is, in a nutshell, what we're trying to do in terms of the M-Shwari study. It's not complete whatsoever. We have tons of questionnaires. We have tons of transcribing to do and translation. Some of the interviews, a few of them were done in vernacular languages because some of them didn't feel comfortable in speaking Swahili or English. And so this is where we go from here, and we're hoping to have some data the next time you see us. Bye. Thank you.
Well, thank you so much. I myself have a lot of questions about all of these services, but I think the audience does too, so we'll leave it to the audience first to get things started. I think there should be a roving microphone somewhere. Yeah, so if anyone has questions, if they'd like to stick up their hand.
Yes, I have a question for Enrique, who presented on the data in Mexico. I'd just like to ask you, if you can, to step outside of the data set that you were using, which in itself was very illuminating, and think about the monetary ecologies. And I'm wondering how pervasive it was for people who held the debit cards to have access to spaces where they could use the debit cards other than simply withdrawing money from ATMs. When I had done work in Vietnam, what I found is that those cards were introduced far earlier than the POS became widely available. And when they did, people were often confronting higher costs because of the transaction fees. So I was wondering if you could give us a little sense of that monetary ecology.
So you're right. I mean, there's very little use of having an ATM card if you cannot use it anywhere. Unfortunately, right now, I mean, I don't know the prevalence of POS devices close to their homes. That's something that would be worth looking at. But yeah, I mean, have no data on that. I cannot answer that question.
Another question, yeah?
Hi, I'm Caroline Schuster. I also have a question for Enrique, and this comes out of my research on microfinance and not on conditional cash transfers. And I wonder whether is any way to tell from your data whether it's a learning curve as far as kind of getting to know the technology, or thinking about the many debts that poor people hold, whether they have to pay down all of their obligations before they start saving, if that kind of time interval might be the 3 months or the 6 months that it takes them to start saving. So what other kind of, besides the financial literacy side of this, what might emerge from the particular set of practices in Mexico that would explain that 6-month period aside from kind of usage issues?
Thanks for the question. So there's two things that I showed that related to the question. Let me see if I understood. One is that the early adopters, they take time to use the account. The late adopters are faster. And the second fact that's related to your question is that within a consumer, they take, within a saver, they take time to to use the account. No matter if you're a late adopter or an early adopter, it takes time for you to increase savings. Now, your question, if I got it right, is why is that? Why? So there's two questions. Why is it that it takes time to use the account? And so that's a very interesting question. And the only thing I can say is that, so actually I had two questions there in the slide. One is this learning? Is it implementation problems, or is it the fact that it takes time to save? I cannot save tomorrow $1,000. I have to save little by little until I reach a target, for example. And in this, I don't have a conclusive answer. What we saw in the data is that at the beginning, the people that got the card first seem to know less than the people who got the card later, which is a bit counterintuitive because you would think that they had more time to learn if they got the card earlier, but in spite of that, they know less. So one interpretation is that the program was not so well implemented at the beginning. The implementers were learning how to do it. But it's very hard to distinguish. It will be very interesting to distinguish between learning and trust versus just having enough savings to accumulate. Now, what we can rule out, so in that sense, my answer is disappointing because I'm telling you, this is a very interesting question. We still haven't got it. We need more data to pin it down. But I think we can reject because the timing was a bit arbitrary, and because we have implementation across a couple of years. I don't think it's something about the particular time that we investigated. It's not that they got the card on Christmas and they had to spend the gift so they couldn't save. That cannot be an explanation because you observe this for many implementation periods. People were given the card on different dates. So it is not about when you got the card. It has to be something that accumulates across time. And across time you can accumulate knowledge or you can accumulate assets. And so far we cannot distinguish between these two. I think this is the next step of the project would be to try to disentangle why the dynamics, why it takes time for this to develop, if it's a kind of trust story or if it's another story, but that's as far as I can go.
I have a question in the front here.
Okay, this one is about M-Shwari. In the video that we saw, there was someone who was saying applying for loan is easy and cheap. And given the kind of experience we had at home, I thought it would be interesting to try and quantify this. Is it because these people have had bad experiences with the borrowing from banks, or because perhaps the only source they had were the loan sharks who are extremely expensive? Because I understand, for instance, in our case, we have Empower, which also, although they say that they will lend to you at 9%, but you find out that this is per month and not for per year. So perhaps the cheapness of the loans here is based on the fact that you can easily get it, and not necessarily that the interest is very low. Yes.
Thank you very much for the question. When we went to the field to collect the data, and also from the literature we were able to access, and also talking to the people from CBA and Safaricom, it appears that actually it's easier for the people to apply for the loan because of the features on the phone. First of all, it saves time. You don't have to go to the bank. You know, in the bank, there are quite a number of modalities to be followed. And also, Mshwari, you are able to save small amounts of money. Like in Kenyan currency, you are able to save even up to 1 shilling. So I think it's the way it has been made for the people not earning quite some bit of money. It also offers savings and lending services. You can save on phone and borrow on phone without really moving from your place of work. So it's very easy to manage.
I think we hear your concern also, because I think you're also highlighting an issue of consumer protection somewhat. Yeah, because we highlighted this with the agents from Mshwari, because if we look at, they gave us a handout, and so the students and ourselves, we were reviewing them. Then if you go on their website, which they referred us to, and take down their conditions and terms, we were asking them, okay, if we can't understand the 6 pages in detail of you get a loan for 30 days, these are the conditions and what have you, how do we translate that as we do this research to the common person? And I think it did come up as an issue of customer protection. And so, yeah, it does raise, and I think it's an issue they're still grappling with, and I think they're going to continue to.
I think we can probably squeeze in 2 more questions, if we have any. If not, I may actually sneak in 1 question to Julius and Dorothy. I'm intrigued to see, for a mobile phone payment aimed at the elderly who don't always have phones, you showed how MTN designed something that looked like a payphone, but you also referred to it as giving cash. So it sounds like they've almost reinvented the ATM. And I was just wondering if perhaps you could explain a little bit more about how that mechanics of that transaction works and how they've actually built a service for people who don't have phones but are still using a mobile money account.
Thank you very much. As our colleagues were presented from Uganda, and also looking at the mobile phone coverage, but with the specific to Kiboga District. Kiboga District still in a rural area with the highly poor infrastructure. Now, when the government launched the SAGE program with the head of state and development partners participating in it, it was realized that most of the elders had the difficulties in operating these new handset smartphones and these other ordinary phones that are available on the market. And given the fact that they have a challenge in charging their mobile phone due to power, you know, if your phone is to be active, you need to have access to charging system and so forth. So it was tasked, the development partners tasked the agent that they contracted, and that's the MTN, to come up with an alternative. Either the money should be paid to these beneficiaries by cash, but because of the scandals in the corruptions within the government, the donor said, no, we cannot risk to give you money to move from a district, say in a vehicle or in a taxi, suppose if you are ambushed on the way. And before even we came here, just 2 months ago, we lost about 46 million shillings of a SAGE program that was taken from Kampala to a district, and the person disappeared with the money, and up to now, he is not known where he is. So because of that, the MTN had to come up with an innovation of coming up with what they call a box. This box doesn't work, or it doesn't need to operate where there's electricity. You simply just go, it's programmed, and when you are given a card, and that card has a secret code. That code is only known by the holder of the card. So you just go, you insert it inside there, and it's sometimes guarded. It's just near the how they call it, this big thing, which gets network, satellite point. So you simply drop there. For you don't know, but the machine records your appearance, your face, and so forth. Julius, you've come here, you've put this, and you've drawn the money, just for purpose in case you go back and claim that you've not got the money. So that box, which I illustrated the other side, serves that purpose. The money is put there, there are security agents or security guards. The MTN hires private security organization to guard where this box is. So these elders simply go there, get their money, and go home. So that box serves as an ATM, but in actual sense, it's not an MTN. But in that sense, it's an ATM giving a helping hand to the disadvantaged people who have no access to the financial institutions and the use of mobile phones. Maybe Dorothy can add.
If I can add something on what Julius has said, there are two modalities which they use. Not everyone who is enrolled in this program is where there is network, nor are they having mobile phones. So there are two ways they do. There is e-payment, whereby the whole transaction is done through mobile money. They just send money, remit money to different beneficiaries. Then for those who are in areas where the network is not okay or it's not there, because there are some rural areas deep in the village in Kiboga, the agent for mobile money at the district level has to go there and do it manually for them using the Sage mobile phone, especially for those who cannot operate phones. There are some elderly who are around 80, they are around 90. They can't do anything for themselves. And even they don't trust the people around them. They believe it is the agents who can do it for themselves. So they have to go there and do it for themselves. That is what they call manually. They have to go there. And according to the people we interviewed, the elderly believe more in the manual process that is done for them. They tend to think it is quick. And they tend to think the e-money is slow and they are cheated. So it's a weird process. In fact, as I was talking to the DFID, one of the implementers, Wandera in Uganda, he was like, they want to evaluate how it is performing. And he has promised to work hand in hand with us, because the information we get will benefit them and it will benefit also and inform our study. So majorly it is done in, they use two models just to do it, the e-payment and the manual one, to help those who cannot do it for themselves and those who are deep in the rural village.
Yeah, just to add again, that machine, the box, it's configured and it is monitored right from the head office, where the MTN and also the donors and government, they have access to see the transactions taking place. So when an agent is going to a point A to make or to give access to these beneficiaries, any transaction done at that point is just reflected. Reflected at different levels, at the donor, the government, and the MTN themselves. Now, if your agent goes ahead and maybe plays around with the card, that box, to say, look, your charge cost has gone high, they summon him and is queried. Why? Because we have a uniform charges of money when money is being transferred. So it's being tracked and monitored. And somehow this is trying to solve the issue of corruption and money disappearing.
Thanks very much. It sounds fascinating, and I hope to be able to get a closer look sometime soon.